The Moving Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve, and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours.
When you partner with Axon, you immediately gain access to a full range of products and solutions designed to meet the complex needs of today's grower. We carry all major brands and sizes of tires and wheels. We specialize in large diameter wheels for large equipment. We have one of the largest OEM replacement wheel inventories in North America. Known for extreme flotation setups, duals, and triples, we have wheels for all makes and models of tractors, sprayers, combines, and grain carts. If we don't have the wheel in stock, we'll custom build, sandblast, and paint in-house. There isn't a more vast inventory in North America dedicated to helping dealers move more iron. With facilities on the West Coast and in the heart of the Midwest, leverage our 230,000 square feet of indoor inventory to solve any problem a grower may have. Move more iron with Axon.
At Big Iron Auctions, customer satisfaction is our #1 goal. As the 40-year leader in auctions for agriculture, real estate, livestock, construction, and transportation, we are here to serve you. Big Iron will handle everything from start to finish. From meeting with you, to prepping your equipment, writing the listings, and collecting buyer's payments, let us do the heavy lifting for you. We love our customers, and we treat them like family. There's a Big Iron sales rep in your area, so let's get together. To learn more, visit bigiron.com.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron, time and time again. Through the years you'll find us here. Moving iron.
Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. Chip is with Blue Reef Agri-Marketing out of Morton, Illinois. And he's nice enough to come on and talk about what's happening in the world of commodities. Chip, how you doing this morning?
Hey, doing well, Casey. This is an exciting time frame. I mean, there are so many things happening in the market. We're going to have to cut it down because we could talk for 2 hours on everything that's pushing and pulling these markets.
Very true. Very true. And a lot of it is, it's not just one thing. It's everything. Like, it's not just weather. It's not just geopolitical. It's a kind of a big stew of everything involved. And obviously we're 11 days away from the election, and then all the stuff that goes on there, and it's razor thin. If you look at the polls, I don't know how much you can trust polls anymore because it seems like they're more wrong than they're right anymore. But if you're looking at everything is kind of folding out. Let's start with weather first. Pretty much any spot in the United States that grows anything needs rain, right? But that's why harvest has been going the way it's been going, right? We've got a good crop, stuff's getting out fast, which is giving this ebbs and flows because there's huge supplies, and we'll get to that in a second. But you start looking at what's going on in Russia with the wheat and wheat growing area, and what you see in Ukraine, which obviously the Ukraine-Russia war is having an effect on the Ukrainian market. But deep inside of the Russian wheat belt, it is dry as dry can be. And then you start looking in Brazil, and it's dry as dry can be. Amazon rivers at record lows, same with the Mississippi River at record lows. So you have all this weather pressure right now, Chip, across the board. You think that commodity prices would be higher than they are, but they're not. But you see these huge upticks like we see this week here, where we went almost 25-cent run up in December corn. Looking at that, Chip, how do you make sense of any of this?
Well, it's hard to. I mean, I was just thinking the last couple of days. I mean, this is a confusing time to kind of pick a side in the markets because of all those factors you said. I think maybe we can boil it down to two things, maybe three. On the one hand, we've got a massive crop out here. We're 65%, 2/3 complete with harvest on corn. We're probably up towards 85, 90% on beans after this week. And so we're getting this big crop harvested, and it's massive. Farmers aren't selling it, and there's a massive demand underneath of us too. We're selling tremendous amounts of corn and beans, beans to China and unknown, corn to everyone, unknown. Mexico's been a massive buyer. We sold 141,000 bushels. 141 million bushels of corn last week for our export sales number. That's probably one of the top 5 largest 1 week totals ever. So there's massive demand underneath the market. There's a massive supply above the market, and the market's kind of shifting and pushing and pulling between those two forces because farmers aren't selling it, but the demand's there. So we get a run up in prices, basis firms a little bit, farmers start selling it. We got a little bit of rain in some of these dry areas here, overnight Thursday, very early morning Friday. Market sets back into the weekend. And then you throw on top of that this election coming in less than 2 weeks. And the commodity funds, which, 2 months ago had close to a record short position on corn and beans both, they're essentially out of that. They're taking their ball and they're saying, I can't predict this either. I don't know. No matter who wins, I can't predict, A, who's going to win, and B, no matter if I could predict who's going to win, I don't know what it means to the markets and geopolitics and financial markets. And so you've kind of had a reset, right? And so what that means to me is that after this election, obviously, if it's Trump, we know that there's immediately after inauguration, there's going to be massive tariffs and, a Chinese trade war again. And so China might be front running some of this with these large purchases to get their hands on some before the trade war if Trump wins. It's just a lot. And then you throw the weather on there, right? But I think at the end of the day, you've got massive demand near term anyway that's run us up. You've got farmers, harvesting a massive crop that aren't really selling much. And the run up, I think, maybe kind of stimulated a little additional farmer movement. And so you're just kind of vacillating in this big range in here. The funds have taken their money out saying, I'll go back long or short. I don't care. After the election, though, when there's a little more certainty in at least who won and what their policies might be. And so that shapes up going into winter that we could still have massive volatility. We didn't even talk really about the weather. It's super dry here. Doesn't affect the crop yet. We're going to, produce a record corn and bean crop. Been very dry in Brazil, but they're getting some rain to get their crop in the ground. They've got their whole growing season ahead of them, so it's hard to think it's going to be perfect. You alluded to some, problems in other parts of the world, particularly Russia and the Black Sea. They've been very dry for the better part of a couple years. They've been dry enough that their winter wheat planting has been delayed a little bit. And so you throw all that into the mix, and nobody knows which way this thing could go. It says to me we better buckle the seatbelt a little bit here because things could get really bumpy going into the end of the year and the first part of the new year based on weather in Brazil and, whoever wins and what their trade policies might be with the rest of the world.
Right. And you've seen also Russia's done some stuff with wheat exports and lifting those bans and taking those bans off. Same with India. You've seen the same things there where they're tightening. Russia's looking out right now going like, yeah, we probably better pull back here a little bit because there's only like 4 countries in the world that like us. So
yeah, they really have. Logically, everyone, myself included, have been a little bit friendly to the wheat market under the assumption that the Russian wheat crop and the Ukrainian wheat crop, for that matter, the Black Sea area, production would be low. And Russia even came out a couple weeks ago and said, yeah, we're going to put a floor underneath this market. I think it was $250 a metric ton. We're not going to sell anything below that. I think it was their effort to try to talk the market up or get the market thinking that, hey, maybe that Russia doesn't have unending supplies of wheat. Well, that fell flat on its face because the world market is trading underneath that, well underneath that. So that failed to get a big response from the market. Now, sometimes where there's smoke, there's fire, right? And if you start seeing this Russian cash wheat price start to rise or they start limiting exports down the road here, that could have a dramatic effect on wheat prices and spill over to corn. So that's a whole other can of worms. There's just so many. There's a dozen probably that we could talk about that nobody knows how to interpret. Is it bullish? Is it bearish? It depends on which way, this particular event goes or doesn't go. And, it's hard enough when there's just the election, talk about just the election. It's hard enough to kind of predict what that might happen, affect the prices. But when you talk about 8 or 9 different things thrown in the mix, it's impossible. And it just, to me, it says, don't get handcuffed by this. I think the take home is U.S. producers, in a lot of cases, have yielded themselves into profitability, especially on corn. So if you have on-farm storage, there's lots of carry in the market. You could be looking at some profitability. Don't take that for granted because if 2 or 3 things go the wrong way, if Brazil has a massive crop, in 3 months, we could be staring at prices and saying, man, that was an opportunity. What do I do now? So I think that's the take home from my perspective. My view is focus on profitability. Yes, prices are down from a year ago, but yield is up in a lot of cases. And there still might be some profitability there and some things to do to lock that in and maybe continue to have some upside via some puts or selling grain and adding calls, take some steps on the risk management side to protect yourself because, if 2 or 3 things go wrong, we could be looking at a big washout in prices.
Yep. So let's spend a little time talking about corn just because of what we've seen happen over the last, and beans as well, over the last about 4-week cycle here. So 4 weeks ago, we started seeing corn prices come up right off the low 4s, kind of making their way up to about 425 or so, 430, something like that. And then they retreated. And at the end of last week, we were back to like 401, I believe. So this week, we've kind of gained it all back. And we're back to that 425-ish mark. I think today they're taking some profits, obviously, it looks like. So they're, it's under 420. As you look at this, Chip, what's your thought process and what we're seeing right now? I mean, it was the world's coming to an end before the last run up, and now we're back to the world's coming to an end, and now we're gonna, as everything's going, drops the candy canes again, I guess. So as you look at this, there's a lot of W's on the chart. So I guess what are your thoughts there?
Yeah, I think even going back here a few weeks ago, during the last time I was on your podcast, I think we kind of talked about this. I think corn has the best case for a trading range, right? I kind of thought all along 390 to maybe 435, 440 for a few months here. And so far we've kind of stayed in that range, right? Because you see this good underlying demand on the breaks, but then as you rally, farmers are going to sell more grain. And so I think it says we stay in this range unless we see something shake loose on the bearish side somewhere else in the world, whether it's the election, whether it's the Brazil weather situation just continues to be perfect. The dollar keeps rallying. There's lots of things here. If one of these things shakes out to the bearish side, maybe you could push the bottom side of that range underneath that 390. I'm talking, December futures now as a reference point. The problem with this type of a market is there's big carry in the market. So typically what happens is once the December goes off the board around Christmas time, it's first notice day, and then early December futures go off the board. March is trading 13 cents, give or take, above the December. Typically what you see happen is December goes off the board, and then March just grinds down to where the December went off the board and kind of erases that carry. So that's something from a producer standpoint we need to take into consideration is in carry markets, doing nothing, typically the market works the carry out. You lose the carry in that type of a trading range environment. So I think still a trading range is normal to expect the next 60, 90 days, but don't forget that there's carry in the market, and if we don't take advantage of it, we typically lose it.
Yep. Okay. All right. So one other thing too, while we're talking about it here, you've seen some cash rallies this week in cattle that have been, well above what you would expect to see this time of the year. But you can say that about every time that we've thought the cattle market was going to fall on its face, it just jumps up another notch. So I guess your thoughts as you look at the cattle market here.
Yeah, that may be what the one market still after probably going on 3 years now that there is a fundamental bullish story. In the grain markets, the funds have been getting out, right? They're getting to almost a neutral position in corn and beans, especially. It's the opposite in cattle. There is a bullish fundamental situation there due to the drought from 3 years back. We haven't fixed that drought. In fact, if you look at the drought map, it's as bad, arguably, as it ever has been in that southwest area. Kind of that Red River Valley area, North Texas Panhandle, Oklahoma especially, but clear up into the plains. And we haven't expanded the herd. And so we're looking at tight numbers. The funds continue to buy. And the cash market, it hasn't just been straight up. There's been a couple pauses. There's been a week or two where we've traded lower or steady. But, there's just a lack of numbers out there. And the demand's good enough. And the fund interest on every break has been to buy. Now they're getting towards the extreme side. There's the drought map you mentioned. Now that's also going to be something eventually, if we don't fix that, that's going to affect the grain markets come springtime. But it's certainly alive and well, and an issue on the cattle side. So we've got a cattle on feed report this afternoon, Friday afternoon after the close. We'll see what that says. But those have been not burdensome and, on the bullish side. So these funds of any of our markets, they like being long cattle. They've extended and expanded their position size. They're maybe getting a little bit extreme, but as long as cash continues to stay steady or rally, the path of least resistance is probably for higher in cattle. I say that though, and you are at an extreme, right? So you got this election coming out less than 2 weeks. Who knows what that means? Who knows what the economy, right? We've had some really weird moves in the interest rates here. I don't know if the economy is as strong as they say it is, but that is going to be the big issue, if there is an issue, that kind of the straw that broke the camel's back, so to speak, in the cattle market, is if we sputter in the economy or you get some sort of a stock market sell-off, you could have a pretty brutal break in cattle. That would be the risk there. So from a producer standpoint, again, don't stick your head in the sand thinking we're going to go straight up. Do something to try to protect yourself, because there's a tremendous amount of risk from the election to sometime early first quarter in the economy. If that sputters, I don't want to be the tinfoil hat guy, but I probably am, although a lot of the tinfoil conspiracy theories eventually prove out to be true. Election coming, are some of these stronger economic numbers that we've seen fudged a little bit to benefit the current administration or not?
It feels like that, doesn't it, man?
It kind of does. It kind of does. It makes you wonder. And the bond market, a few weeks ago, you had the Federal Reserve cut interest rates,
Yep.
0.5%. Well, guess what's happened? The bond market says either A, that was wrong, you screwed up, Fed, because you gained back almost that same amount in interest rates in the bond market since the Fed cut. So they're saying, hey, like Coach Corso on College Game
Not
Day,
so fast.
not so fast,
Yeah.
Federal Reserve. You might have screwed the pooch on this, or something else is starting to bubble up that maybe says, hey, inflation hasn't gone away. It's not in control. Maybe that 50 basis point interest rate cut was more political than needed in the system. The bond market historically has a tendency to get things right longer term. Stock market doesn't. The smart money on Wall Street watches the bond market. It's telling you there's issues, or inflation is not A, there's issues with the economy, or B, inflation is not tamed, and we got some issues. So, again, that directly relates to the cattle market, probably more so than any of our other markets, because if the economy sputters and the consumer gets choked out, I don't know that cattle can stay where they're at, even with tight supplies.
Yeah. The thing that about that, agreeing with what you say there, looking back before the September jobs report came out, right, there was this, oh man, we have this huge correction in the jobs. We were actually overshadowed by, depends on who you talk to, between 500,000 and 800,000 jobs, right? Well, the September job report comes out and says, oh, we gained 250,000 more jobs than we thought we were going to have in September. So now, I'm looking at that going like, well, if you were off that many jobs to begin with, how do you know you're right now? I mean, how do you know you're that big of a boom? And what that did to the market was, oh, well, things are great. And the Fed immediately came out and said, well, we're pumping the brakes on reducing interest rates. We're not going to do another one in December, probably meaning that.
Yeah.
So, I guess, so as you look at this situation that we're heading into the year with a probability of next to zero for a interest rate cut, and you start looking at the January USDA report, we're having great crops, but what I'm getting is, they're awesome crops, but they're not as awesome as we thought they were, right? They're off maybe a tick or two, but they're still amazing crops. As you look forward to the January report that kind of does the final, shoring everything up for the year, what are your thoughts there, and how do you think that could play out?
Yeah, so we're going to get one in November, right? Here shortly after the election. I think it's the week of the election, honestly. I think it's the 8th or the 9th November crop report, where they'll do one more, yield survey. They'll check yield. So they have the ability to change yields in November. And then the final one in January. They don't do anything with yields on the December WASDE report. Great question, Casey. By January, I think you're going to know a lot more about weather in South America. In my mind, it comes down. We didn't talk much about beans. I think beans are the weak link on the grain side. I think the case for tightening world stocks in corn and wheat. You mentioned the drought situation, the Black Sea on wheat. Even though we have a big record crop here, our demand is massive on corn. Corn and wheat are in a good situation. But if there is no weather problem or production problem in Brazil, we're going to have way too many beans. By the January crop report, you're going to know, not with 100% certainty, but you're going to know whether there was or we currently have a weather situation, a production issue in Brazil, or they're on their way to a big crop. If they're on their way to a big crop, there's going to be way too many beans in the world. And if beans go lower, corn is not going to go higher in that environment. It might not go as low as beans go, but beans will drive it. So I see that as the big issue going forward. Is it really comes back to Brazil. It probably doesn't have a lot to do with what they say in January. Even if they come down, I think they're close enough, right? Like, there's no big trend. Sometimes they start out in August, and then they're like, we got out in the field, we got to cut, we were too high, or vice versa. This time was kind of pretty steady, right? They started pretty high. They got out in the field for some actual data and yield checks. They're like, okay, it's that good. We got to ratchet it up a touch. So it doesn't look like that trend is there. Could they come down a bushel in corn? Sure, but it's a big enough crop. I don't know that it does anything wildly bullish. Could they come down a half a bushel in beans? Sure. But in my mind, it still comes back to what's the size of the bean crop. You're talking a potential for a 6 billion bushel bean crop if Mother Nature cooperates in Brazil. And that's just too much on top of, whether we had a record crop or they have to come down a little bit by the January crop report. There's too many beans in the world. So unfortunately, I think a lot of this ends up in the fate of corn and wheat, especially, is in the hands of beans. And it's pretty hard to create a bullish scenario in beans, especially with China, right? There's some issues in China with their economy. They're trying to stimulate their economy. At the same time, it looks like they had some large crops domestically. They've been a big buyer of U.S. beans recently, but do you remember, if things go sideways and they think they can get those beans cheaper out of Brazil, they come January, February, they could be canceling those sales, which they've done before many times. They're not opposed to it, and contracts don't mean anything to them. And so that's kind of in the back of my mind too. I'm a nervous Nelly when it comes to the bean market. Long answer to your January crop report question, but I think by then the South American weather overshadows whatever they say on yields here from the USDA.
Right. And I'm kind of in the same boat as you. I mean, the situation in Brazil hasn't been that good all year, and it's shaping up to kind of continue in the same pattern. And like you just said, that's going to have a bigger play on if Trump becomes president of the United States and there is a trade war and those kind of things. China, we might be the only place in town China can go get the soybeans they need just because of supplies and those kind of things that are out there. Because Brazil is going to shut off supply eventually sometime. They're going to be like, okay, we can't sell you anybody anymore, and they're going to keep what they've got, and we're going to have to come to the United States, and that's going to be good for that. But a lot of ifs and a lot of what ifs and a lot of scenarios there they got to play out to make that happen. So, Chip, appreciate you being the podcast. Folks want to reach out to you and get more information about what you're doing. Where's the best place to do that at?
Yeah, just give us a call at our office here in Morton, 309-550-7213. Love to chat with you. Massive risk ahead in these markets, and there's a lot of ways with some proactive planning to kind of weather that storm. So we'd love to chat with you.
Right on. Chip Nellinger, Blue Reef Agri Marketing. Chip, appreciate you being on. We'll see you. I guess we'll actually see you in person here in about a week or almost a week. So,
Nashville's coming fast. We'll be in live in person. We'll do it live.
That's right. Do it live. Bill O'Reilly, do it live. So check that out. Chip, appreciate you, man. We'll catch you again next time.
All right. Sounds good. Thanks, Casey.
Right on. Casey Seymour with Moving Iron Podcast. Check me on Facebook, X, and Instagram. I keep saying Twitter. I got to say X now. Check out the video version over on the YouTube channel, which is Moving Iron Podcast YouTube channel. Go to LinkedIn at Moving Iron Podcast and check out everything Moving Iron related at movingironllc.com. So with that, I'm Casey Seymour, Chip Nellinger. Let's move some iron, folks. Out. Iron Podcast is brought to you by these great sponsors. Are you looking to value your equipment more accurately, target the right buyers and close more deals, reach your ideal customer? Then look no further. Fusable isn't just about ag data, it's about action. Our best-in-class solution empowers you to value your equipment accurately, make informed decisions, and find the perfect prospects. Ignite your dealership's growth at fusable.com/movingiron-podcast. Out in the field, every decision counts. You wouldn't plant without testing your soil, so why would you prospect blind? Introducing EDA, your one-stop shop for ag equipment intel. EDA goes beyond specs and prices. You get deep dive data on every piece of equipment like UCC filings that help track ownership changes and uncover potential sales leads. D&B firmographics, which help you understand the financial health and buying power of potential customers. Market trends that help you stay ahead of the curve and insights on equipment demands and pricings. With EDA, you're not just looking at data, you're seeing opportunity. Find the right buyer, sell smarter, and build lasting relationships. Visit edadata.com for your free demo and unlock the power of knowledge. For over 80 years, Iron Solutions has been your go-to data source for ag dealers, lenders, and manufacturers. Get powerful appraisal and value forecasting tools that fuel profitable decisions anytime, anywhere. Get your free demo at ironsolutions.com. Iron Solutions, confidence in every click. Today, there are many ways to finance ag equipment, but nobody delivers simple, fast, or flexible financing like AgDirect. Learn more about your options to buy, lease, and refinance equipment at agdirect.com. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. This podcast is proudly provided by Axon, helping dealers move more iron for the past 100 years. Find out more at axontire.com. Move more iron with Axon.
Moving iron in the 21st century. Hard-working people working hard for you and me. Moving iron time and time again. Through the years you'll find us here. Moving iron.